Hello, everybody. Welcome back to the channel. My name is Max Convexity. My channel's name is The Covered Caller. I specialize here in high-yield option-based income funds. We also talk about other types of funds also, but primarily we kind of specialize and like to talk about options around here. Hope everyone's having a great evening. I have good news. I was going to pre-record the daily, my new show, The Daily Factor, but one thing led to another, and I decided just to do it live. So I have a little, speech I want to give, or, I have a little script I want to talk about. There's Jackson. Jackson's here. Hang on, let me shut the door. Jackson's here for the Daily Factor. Just in time, Jackson. He always hears me talking and thinks there's somebody in here, and he has to just come check to make sure. Anyway, all right, guys. So I do have a show, but then after the show, we could do our normal live stream stuff. If you guys want to ask questions, by all means, ask questions, and maybe we could even look at your favorite funds or whatever. But let's just get this out of the way first. Okay, so what we're going to do is I have made as usual, an infographic, so we don't have to look at the spreadsheet. This is more interesting to look at. Okay, so first of all, what even is the max factor? So the max factor, I have a once a week show where I do the top 20 list according to the max factor, but unfortunately we only see the top 20 funds. It's the same 20 or 30 funds all the time. This show is going to dig deeper, and it's going to actually look at the whole universe of ETFs I follow. I follow 144 of these high yield funds. I'd say probably 100 of them are option based, but I also have some closed end funds, some dividend stocks, a couple of preferred funds we're going to talk about tonight, and a few other things, even some bond based stuff. Anyway, so what even is the max factor? So the max factor is my own metric. And the reason I invented it was because I don't think traditional metrics and TradFi finance can keep up with these new high yield funds. These funds that pay 100%, 50%, even 30%, even 20% is unheard of 2 years ago. There's just no way to. It's hard to describe these funds adequately by just looking at total return. Total return is great. Total return is something important to consider, but I think a total return as the finish line, or maybe the score of a ball game. So you have two football teams, Team A and Team B, and the final score is 21-21. So it's tied. So you just look at that, you're going out, and both teams are about as good as each other. Well, if you watch the game, Team A dominated the field. They dominated the line, both sides of the line. Their quarterback played well. They scored well. They got out 21-0. Then by the fourth quarter, it's 21-7, and they were cruising to a lead. And then in the last 2 minutes, there was two fluke turnovers that happened. The other team came back and tied. Well, the max factor would tell you, hey, Team A is the better team if that was ETF. So I'm looking for those types of ETFs. I'm looking for the quality wins, the quality total return. We all want high yield, but a lot of us don't want high yield just at any cost possible. Okay, so speaking of high yield at any cost possible, I lined it up by yield from highest to lowest, but also I just kind of want to show you how it works in case there's new folks here. So what this shows you, and I have a spreadsheet we look at all the time also, but it shows you the ticker, then the $23, that's how many dollars it's paid per share in dividends. That's pretty good. Misty, $23. You can look at the price. Heck, it only cost $12 to buy this thing a year ago. So if you think about it that way, it's paying 196% yield. However, if you look over here at the quarterly NAV return, that's not the quarterly total return. That's the quarterly NAV return. So just the NAV alone on this baby's down 40%. You can look, the price minus 90 is the price 90 days ago is 20 and change. Now it's 12 and change, and not a lot of change. So that has dropped $8.34. Well, if you take that as a percentage, it's about 40%. I don't really use that column too much, but volatility is also something important to consider. Just real quick, let me describe this really quick. I made a VIX index for every stock in my 144 stock universe. I made a VIX calculation. So You guys may be familiar with the VIX if you're traders, and we talk about it all the time. But the VIX is just the volatility of the SPX. And that, just for comparison purposes, that runs around 12 or 13. Now, it can go a lot higher if the SPX, depending on what's going on. But generally, you're going to look at a 12 or 13 kind of an average, maybe 14 average volatility for the SPX or the SPY, same difference. And then for the NASDAQ, the volatility is maybe 16 or 17 kind of on average. So anyway, when you see something that's a 57 vol, that's telling you it's pretty dang volatile. It's about 4 times as volatile as the NASDAQ. So, that's not quite 4 times, but nearly 4 times as volatile as the NASDAQ. Anyway, second on our high yield list was MST. You can look at all this stuff yourself. Look, MST dropped 57% in NAV just on the quarter. Now, granted, it's paying a huge, dividend. But anyway, the max factor separates the dividend yield from the NAV and doesn't put them together. If you put them together, you get total return. We already know what the total return is. That's how I identify a quality yield. Okay, so I would say right here, the first 4 on this list aren't really a quality yield because they had a 40, because look at all this NAV they bled. Anyway, so let's forget about that. Let's do this now. Let's look. Let's just sort it by the max factor. Now let's see what we have. All right. Look at what's number 1. Wow. Look at that. Do you see that? SEPI. Now, SEPI is from Rex. I'm excited about Rex lately because they're coming out with their new fund on Friday, the 31st, called, I already forgot what it was called, ULTI, ULTI. Anyway, SEPI, ULTI, and that's the one other thing. ULTI will be on here, but not until it has 3 months worth of data. You have to have a quarter's worth of data to appear on this list. So if your favorite fund isn't on here, it's either an oversight by me or it's not a quarter old yet. We're adding new funds all the time. A few days ago, this list had 132. Now we're at 144. Anyway, SEPI's good. Look at this, $13 per share worth of dividends. Okay, that's a lot of money. But it did cost $43 to buy it. It cost $39 to buy it because we bought it 90 days ago, of course. Yeah, of course. I mean, when you're made for the sake of the calculations. So yeah, something like this costs $39 to buy, but now it's trading at 43 and it's paying a 33% yield. It's not hard for me to understand why this is absolutely number 1 on the list right now, because it's giving you 10% of your money back in the form of NAV growth. And then, 30% in the form of yield. Now, remember, this is a quarterly NAV return, but this is an annualized yield. But that's just the way it is. That's the way I look at it. But, all right, now number 2 is blocks. Now, I have a soft spot for blocks, as you guys know. Blocks, ALTI, LFGY, those are probably my 3 favorite funds. I mean, there's other ones too, but those are the really high paying funds, so the ones that pay, more than 30%. I think those are really good. GPTY is really good also. And I have a couple of others I like. GPTY is not going to be on this list tonight because it's based on big data and AI. And this is crypto stuff. So, but Blocks has a solid lineup of crypto companies in it. Let's just go look at Blocks really quick. We aren't going to go look at Blocks, but I'm just going to pull up their FinViz page and kind of get a little bit different perspective. And I want to show the top 10 holdings. Oh, here's the top 10 holdings. They have the HODL ETF. They have FBTC ETF. And they have an Ether, ETHA ETF. But then in addition to that, they have stocks that are in the industry. They have Galaxy, which has been doing pretty well lately. I mean, they have IREN, which has been doing, let's see. Yeah, IREN's been doing really well. Pulled back. A lot of these have pulled back, but they've, look at Riot Blockchain. Pulled back recently, but it's now back close to all-time highs. HUD 8, Robinhood, Cypher. That's the kind of company they are. This is one of my favorite ones out there. I think this thing's doing really good stuff. It pays weekly dividends. If you look back here at the spreadsheet or the infographic, they're doing a great job protecting capital, because look, the stock's price went from 22.66 to 26.81. So it returned, it's up 18% for a quarter in NAV alone. In addition to that, it's paying an annualized yield right now at the rate of about 27%. That's not bad. Now, the one knock on it compared to SEPI is it's about twice as volatile. So, just take that into account. But then after that, this is kind of a little bit of a surprise to me. Number 3 is Stretch. Now, Stretch is it's a preferred stock, and it's based on MicroStrategies. It's been issued by MicroStrategies, or otherwise known as Strategy. Well, like I say, it's preferred stock, and just went public the last day of June, and they've announced plans to pay a 10% yield. And they supposedly, in their prospectus, they're trying to make it like a stable coin. So they're trying to pay 10% with very little NAV movement. And they have 2 different series. They have Stretch, STRC, and they have STRD, Stride. We'll look at Stride in a second. All right, but as far as Stretch goes, let's see how they've been doing. They've been paying the 10% yield, and the NAV's actually been positive. It's gone from $93 to $98. So it's up 5% on NAV and paying a 10% yield. I mean, we'll take it. But here's the main thing that I really like. Its volatility is a 9.5. That's less than the SPY, pretty considerably less. So anyway, this is maybe a rising star, and this just recently got added to the Max Factor, I think yesterday. So I was on last night's show too. This is interesting. Look at this. Number 4 is SSK. Now check this out. SSK is Solana staking. So this isn't a covered call. It's not a preferred stock. It's actually staking cryptocurrency. So it's from Rex Osprey. And now the one knock on this thing is the yield's really small. I usually require a 5% yield to be in the Max Factor, but I make exceptions for ETFs that I think other high yield investors might be using, even though they aren't high yield. The other thing is maybe someday in the future, the yield of Bitcoin will go up for whatever reason. It's definitely something we want to keep an eye on. The yield's a little too low for me, for my taste, but they don't ask me for my opinion. Also, it just pays monthly dividends, which I think, is kind of a knock on it that, some people don't like, but let's go back to the spreadsheet. I believe the annualized yield is like 3.5%. So, I mean, it's 4%. So, it should really be 5 to be on here, but we're going to put it on here. Maybe the staking rewards will increase over time. The important thing is, or another thing that we have to consider is protecting capital pretty well. Went from $28 to $30. That's over the past quarter. So that's definitely something to keep an eye on. Now the volatility, unfortunately, on this thing is sky high. It's a 64 on volatility. And since it's only paying a 4% yield, it's really kind of the opposite of what I'm looking for. I like ones like SEPI or blocks that are 20, 30, 40 on vol and paying, 30, 40, 50, 60 and up on yield. I like a little bit more yield for that much vol, but what I know, I'm definitely not a Bitcoin maximalist. I don't understand all this stuff totally. Well, look at STRD. Now, STRD, the nickname is Stride. Now, this one I think is the one that is supposed to be less stable. I think STRC is supposed to be one of these is supposed to be like a stable coin, and one of these, the price is going to move around a little bit more. In any event, they both have a target of around 10%. That's what the strategy board has declared. This one's been paying 10%. Unfortunately, the NAV's down a little bit. The NAV's dropped from 83.90 to call it $80. Call it 84 to 80. It's basically 84 to 80. So, you can't have it all, but I mean, that's not a bad one. Then we have LFGY. LFGY might be the one that is the best, just looking at the eye test, that I like, because I like this yield of 68%. I wish it had positive NAV, but since the NAV is only down 2% and it's paying a 68% yield, I mean, I personally can forgive it. You also have to look at the volatility, though. It's pretty volatile at a 32, but this is a good one and can work for depending on your circumstances. Then after there, the NAV drops quite a bit. Those first couple, let's see, SEPI blocks, STRC, SSK, STRD, and LFGY, I would say all protected NAV pretty well. To drop 2% or 4% in a quarter when you're a high yield fund, that's not that bad. However, once we get down here to Maxi, now Maxi's having a little problem, with NAV. NAV's down 13%. But then right underneath that, we have Biddy. Their NAV's down 10%, or basically 11. Then we have Baggy. Their NAV's down 14. Then we have YETH. Their NAV is down 12 or 11. Then we have BCCC. Their NAV's down 13. So that's kind of the next little group there, I would say, as far as quality goes. Just if you just look at the NAV decay. Now, you also have to consider the other factors, the volatility and the yield. And Maxi pays a decent yield at 32%. Biddy's paying 21%. Biddy's actually a 2% target fund from Amplify. And Baggy, I forget, it's either a 3% target or it just doesn't have a target. They just try to earn as much as they can. Well, anyway, they're both from Amplify. Biddy's, has a 21% yield. Baggy has a 28% yield. And each of them are down similar amounts in NAV, at least so far this quarter. Then we have YETH. It's in the same range of risk and reward. Now it has a lot higher NAV at 94%, and it has a lot higher volatility, actually at 61 also. But it's been doing about as good of a job protecting capital as Biddy, Baggy, and BCCC, and those are decent funds too. And then we have BCCC down 13% on NAV, at paying a 39% yield, and it's 29 vol. That's not too bad. Then we have MS2 from Rex. Now this thing is. Then we have kind of the next group of funds, and these are kind of the ones that are a little bit more volatile and have some more NAV issues. MS2, which is down 31% on NAV only. Now, luckily, it's paying a 46% yield, but it also is pretty volatile. So that's why it's kind of mid to lower pack. Now, in its defense, I don't know that there's anything wrong with MS2. It's based on Mr., as a lot of these are. About half of these funds are based on Mr. I maybe ought to just start doing a Mr. evaluation by itself. But I don't know. I figured Mr.'s basically Bitcoin, so we could all throw it in here together. But we could also have Misty Mondays instead of Maxi Mondays. But I think we just throw it all in together. Misty, Maxi, it's all the same deal, right? But then anyway, and then kind of the rounding out the bottom of the list, we have YBTC, YBIT, MST, IMIST, XBTY, and MSTY down here at the very bottom of the list. Now, the problem with these, and the reason probably they're on the bottom list, there's some combination. They either had sky-high volatility, like MST does, and or they have poor NAV performance, like they all do, down 50, 40, 30%, 40%. So that's kind of how you get kind of towards the bottom of the list. That can turn around in a hurry. If MicroStrategies keeps rallying, it looks like it's made a bottom, turned around. If it keeps rallying, we would expect these funds to climb up the chart. And I would especially expect MST to climb fast because it has double leveraged exposure to Bitcoin. But I would also expect MS2 to catch fire and a lot of these. Anyway, we'll look at this again next Monday night. Next Monday night, we'll have Bitcoin Maxi. You never know. By next Monday night, there might have been some more funds that have turned 3 months old. So there might be some more ETFs in here for us to look at. And plus another week will have gone by. Maybe the market's melting up still by then, or maybe the market's doing the opposite by then. So, it's important to keep an eye on this. And I really thought with my top 20 list, we only look at the same top 20 funds basically every week because there may be 50 of them that run in and out of the top 20, but these other funds can work too in certain circumstances, depending on what you're looking for. It just depends. I mean, you don't want to just go for the lowest yield. Although if you would have gone for the lowest yield, you would have had SSK, STRD, STRC, Biddy, Blocks, and Baggy. I mean, that's not the worst looking lineup. But really, I think you can do better when you just look at all of them together, let the max factor parse it out for you. And I really think kind of the class of the lineup this week: Seppi, Blocks, STRC, SSK, and STRD. Now, I really SSK, I don't understand staking enough. I would be cautious on that one. But I mean, the numbers don't lie. Actually, statistics can lie. But I try to be careful to design an algorithm and a method that is pretty straightforward. But anyway, according to my own metric, SSK is number 4 on the list. So maybe I need to consider some for the model portfolio. All right, guys. Well, that's all I have for tonight's tonight's daily factor. Sometimes this is going to be recorded, and sometimes I might just do it live. But I thought it might be fun to do it live tonight. So if you guys want to, we can turn it over for questions and for comments. We can continue with our study hall, or we don't have to talk about the max factor. We could talk about football and girls or whatever. Last night we ended up talking about sports. Our live stream last night was awesome. We ended up watching that awesome baseball fight between Nolan Ryan and Robin Ventura. We can, and I told stories about college days and stuff. We can do whatever you guys want. This is your channel too. I mean, it's our channel. It's our time to talk. We got 16 comments and 30 folks in here. Well, that is wonderful. I really appreciate you guys. All right, so we got Greg in the house. Thank you, Greg. Yeah, maybe split the single stock ETFs from the multi. Yeah, I know it, and I've already thought about that. I almost thought about not putting Blocks and LFGY on there because but they're both 100% crypto. And then I thought maybe I should drop, just do the Misties by itself. And then I thought, well, should I put Coney on here and Coinbase ones? I thought, it's not directly B. So, yeah, I do like the idea of Maxi Mondays, but I may, here's what I think I'm going to do. I really think Blocks and LFGY belong part of the Maxi list, especially if you're going to put Mr. on there and stuff. But I'm also going to have a day, maybe Wednesday, because tomorrow is Tesla Tuesday. I think on Wednesday, we're going to have Hedge Fund Wednesday. And by hedge fund, I'm including the ones that move stocks in and out actively and do fund option strategies. So that's going to be LFGY. So we'll have it in there, but we don't mind looking at LFGY twice a week. I like LFGY and Blocks. So we'll get another look at those on Monday. And of course, we'll throw those in against Alti, and we'll throw Seppi and Feppi in there, and anything else that has a basket of stocks and kind of moves them and can move them in and out, as opposed to a static portfolio. We'll even throw GPTY in there. They move them in and out, and Chippy. So that'll be Wednesdays. We have, I'll think of a catchier name for it. But we'll have, that'll be Wednesday for sure. Then Thursday and Friday, I'm open for ideas. Saturday, we'll have the top 20 countdown. And maybe Sunday, I'll talk about the new entrants to the list. We'll go over who's new. And because that's what I did last night. We talked about STRC and STRC and STRK. And I think maybe Sunday will kind of be kind of a catch up, and we'll catch anything we missed. Or maybe it'll be a wild card. Maybe we'll vote on what happens Sunday. We could also have like I said, we could have a Misty show by itself. We could have a Coney show by itself. There's so many Coinbase surrogates in here if we wanted to. It's just kind of whatever you guys want to look at. But I really thought we were missing an opportunity not using the max factor more. I'm really enjoying it. And here's a prime example of why I enjoy it so much, or something today reminded me of why I enjoy it so much. Before I used to do the max factor and look at it every day, I really wouldn't have known that Seppi's doing so well. Seppi just kind of slips through. You can't keep track of everything. And depending on what I'm doing in my influencing, if I've been doing a lot of, yield max and a lot of, X funds interview and a lot of high yield stuff, then all of a sudden something from another company sneaks and just moves up the list. Well, nowadays, since we look at it every day, we're well aware of it. But yeah, Seppi's an impressive, Seppi definitely passes the eye test. I can see why it's number 1. If I was making this list myself with my own judgment, and that's why I don't use judgment, we use numbers. I really think maybe LFGY paying 68% and only being down 2 on NAV with a 32 vol. I don't know how that's not number 1. I mean, I do because it didn't, it's math. But I mean, if I was the editor and making a list just based on this, I might make it go LFGY. I do see why SEPI's there, but I might make it go LFGY block SEPI. And I would knock SSK down if I was editing it. And I may start doing that. I might start writing about these stocks in Patreon and making an editor's ranking or something, just like on Morningstar. They give you the raw numbers, but lots of times they'll write a story and they'll say it's an editor's choice or something. Because I would like to, I'm just saying the editor's choice, shooting star of the night was LFGY. That's impressive. I mean, 68% yield, down 2% in NAV, and it hasn't been a great time for this industry lately. I mean, because remember, we're looking at a quarter. We're zoomed in on a quarter because I'm also trying to catch elements of momentum in there. So that's why I don't look back further. It's what have you done for me lately? So in the past quarter, the quarter started July 23rd. So let's see. Or July 20, whatever. So right there. So there, right there where my mouse is, just visually, you can see, well, it looks like Bitcoin's almost recovered that price. Let's pull up Bitcoin. Let's pull up Coinbase Bitcoin. Yeah, so there's where the quarter started. It looks like the price is around 119. Heck, we're almost back, baby. We're at 116, or we hit 116 today. We've pulled back to 114. We're almost back, baby. Come on, LFG. Anyway, so that was my thoughts on that. But great suggestion though. ES Life, I appreciate that, or Easy Life, I guess. They have 3 new preferreds. One of them did not. Okay. So one of them, I punched in the ticker and it didn't pull the data. Google Finance didn't pull the data, and I don't know why. I'll look into that though. That's what the Sunday night show's for. And that's what I have you guys for also. If you guys know of anything that's not in there that needs to be, let me know about it. Put that ticker down there and I'll check it one more time. Oh, it's STRK. Okay. Yeah. Let me show you what I came up with on this one, because I wanted to put this one in, but I don't think it would go in for some reason. You can't even pull it up on FinViz. So let's do this. Let me see if Google knows who it is. Sometimes the Google doesn't, it just kind of acts weird sometimes, but let's go just try to add it to the bottom of the database, which is where we add new ones. Yeah, I tried to do this yesterday and I forget what the outcome was, but for some reason it wouldn't go. See, there's STRC, STRD, TLTP, which I don't know how TLTP wasn't in. Tune in tomorrow for Tesla Tuesday. I wouldn't be surprised if that one wins. Wouldn't be at all surprised, but I don't know. TSLW we got a lot of good Tesla surrogates. We got a lot of good. So this one's called Streak, STRK. And if I hit enter, it should pick up prices from Google. It's trying to load. Well, yeah, it did get it. Okay. My apologies. Anyway, let's just look at it and see where it would have come in. Anyway, good catch there. Thank you for telling me about that. Yeah, it's been around since February, so it's been around longer, paying a little bit less yield. NAV's kind of hurting, down 17%. But so this one definitely would have, not made the list. So it didn't affect the outcome of our list, let's just say. But yeah, thank you for bringing that to my attention. They'll cancel dividends on Stride and Stretch if it's not. Now, I don't know. Does anyone know the answer to that? What I read when I read the prospectus, or I did research on it, Stride and those yesterday, and the board has to vote on the dividend. And yes, the board under certain circumstances can cut the dividend, or they have. It just didn't give you a lot of detail. It just said based on, I don't know. I'm hoping one of you Bitcoin Maxis in here can explain that. If you can, put it in the comments. Well, there we go. One converts to shares if Mr. goes to $1,000. Oh, okay. So that's like an option. It's a preferred stock, or it's a warrant. That's called a warrant. That's the reason it is not in Finviz doesn't do warrants. That's it. I bet you. I'm thinking that's what it is. It's a warrant. Hey, Froggy. Hey, Froggy. Markets were pretty good today. Yeah. Should we go look and see what the markets are doing now? Let me get finished with these questions, and then maybe we can talk markets or something. Just want to make sure there's nothing else having to do with the max factor. This is kind of fun doing a live. Maybe we'll just do the daily factor live. From a selfer standpoint, recorded shows seem to get more views, but I wouldn't mind doing it live just to save time, because I was going to do a live anyway tonight. The truth of it is I tried to record this from like 6 o'clock on, and I had to mess up the computer unplugged. I just various one thing or another. And then Jax wanted to go on a walk, and he started whining. I messed me up. I took him on a walk, came back. Then I was hungry, had to eat dinner. And then I tried to record it again. Something else messed up. And I'm like, it was 8:30. And I'm like, let's just do this thing live. Anyway, yeah, today was a good day. So what do we have here? The Bluegrass one. Now, I've never seen your name in here before. Maybe you're a first-time commenter. Anyway, I appreciate you, but I'm pretty good at remembering names. Most of these guys I see every night. I also don't know if I've ever seen you around here, Easy Life, but maybe so. Anyway, okay, so let's see what the Bluegrass says. As I study Alti in depth, I'm seeing two strongly divergent views. What are your thoughts on Alti's total return potential over the next 12 months? Well, I made a whole video about that, and you're right. That's like talking politics. My mom always told me not to talk politics and not to talk religion. And, especially in with strangers and somebody else's house for dinner or whatever, in certain circumstances, those are two topics you should stay off. Now we used to talk politics all the time at home. She's a huge liberal, and I'm a big conservative, but I'd always fight with her and my sister. They're both liberals. My dad's kind of middle of the road, but yeah, you shouldn't bring those up in mixed company, so to speak. All right. My thoughts on the total return potential in the next 12 months. It totally depends on the Qs. Let me ask you this. What do you think the Qs will do in the next 12 months? Because based on that, then I can tell you what I think the total return and the NAV return will be. But let me just try not to dodge the question. 20% maybe? Depends. Now that can vary. It depends if the Qs rip 50% higher over the next year, I'd say 30 or 40%, maybe more. But but if we have a bad next year, that's why I'm kind of hedging, and that's why I'm going to say, well, here's my hope for Alti and for blocks and for these the really high flying ones is I want to, after it's all said and done, double the total return of the SPY. That's what I would consider, and double the average total return. So the SPY's up 10 or 12, 25%. I think that's a win. I think that's a win. You can make 25%. You can double your money in 3 years, so you can get the free money, and that doesn't even include drip, or the drip would even be, well, no, it does include drip. But yeah, that's about the rate I'm going right now on my Alti position. I bought it 2 different times, in December and in April. I bought it in April and got a good price, 573, right on Liberation Day. Right as soon as I heard the news, I bought it as fast as I could. And right now I was looking, and I'm on full drip, and I'm up about 25 or 30% right now. My share count's doubled, but my average price is like 773, and the closing price today was like 504. Underwater on NAV, made a ton of yield. I'm making about 25, 30%, and I'd be happy with that every year, total return. But with the caveat, I want to be rewarded if the market has a really good year. That's the whole idea. So if the NASDAQ's up 50%, I think this thing will make more like 30, 35%. I hope that answers it. All the Bitcoin funds are a little bit overwhelming, and the print was kind of small. I didn't realize how many there were. I could have done a better job on the infographic. But yeah, it is a little overwhelming. So maybe we'll break out next time. We'll break out the multiple stock ones. I guess we'll break out blocks and LFGY, and I won't put them in there. And maybe that'll make it a little bit better, but I just kind of think that's the way it's going. That's just the way Wall Street's going. So, we could also do, we don't have to be sectors of the economy. maybe we have a high yield Thursday where we compare all the ones that are 75% yield or more to each other. And maybe we have maybe one day we look at a low yield. We have a stable Saturday and we look at all the ones that are between, 5 and 12%. There's all kinds of little themes we could look at. Maybe we look at just all the monthlies. We line all no one cares about monthlies, but maybe one day we sort it by weeklies and we look at all the weeklies, something like that. So I'm trying to make this as engaging and as fun as possible. Can we talk about Alti competitors? Yes. Here in a second. Let me just make sure I said hi to everybody. Yes. Hit the like button. I appreciate that. Subscribe, or you guys probably subscribe, but yeah, the new college football playoffs, too many games. I hear you. Max, were you at Hula Hut this past weekend? I was not at Hula Hut. I wish I was at Hula Hut. You have no idea. I'm trying to think where I went the past week. I didn't even go close to Hula Hut. I have a jogging route where I jog right down that street, which is called Lake Austin Boulevard. But I'm kind of out of shape, and that's my long route. But I jog from my house all the way to the dam. I jog all the way to Red Bud Isle. So I jog right by there. Man, that is such a fun run. I love jogging that way, jog right down Lake Austin. So I live in the Northwest Hills. So it takes me about 3 miles to get to Lake Austin. I jog over Mount Pinnell first, come down the other side of Mount Pinnell, and then I'm in Terrytown. And yeah, that's a great route. But no, I was not there. I wish I would have been. I haven't been, the last time I was there was in this picture. My kids were in town, and that was 2019, and I was about 40 pounds bigger there, but whatever. But yeah, that was in front of Hula Hut. But yeah, Hula Hut's always a good time. All right, Mark is saying it will this week. Okay, I forgot what we're talking about. You guys probably know. So Froggy should probably wait till Friday since 2 more are coming. Yeah, boy, Friday's going to be fun, isn't it? I mean, or maybe not so much Friday, but it's getting ready to be intense with Alti competitors. And I'm not going to forget that question. We'll talk about Alti competitors. I really think maybe the best Alti competitor right now is SEPI or LFGY. I mean, based on that both SEPI and LFGY are doing, and blocks. Those 3 are doing really good. And now we're going to have 2 more choices come out that are basically Alti competitors. A lot of you guys like Chippy. Chippy's that type of fun where they move stocks in and out and they go for higher yield. And I mean, so we have a lot of good choices in that arrangement. Yeah, the board has to vote. I read the prospectus yesterday and, I understood about half of it. Okay, so you're the first time. Thank you, Bluegrass. I'll try to remember your name is Randall. But yes, thank you so much. Okay, moderate gains only. Well, let's look at that. So where did I have that? Don't I have something called I'm trying to think what I did that. I had a future value calculator, but I don't know where I made it. But anyway, I remembered enough. I mean, I'm trying to think where it was. It was a AI artifact. I'm just not sure where I put it. Okay, so if moderate gains by 15%. Or 10, let's just say 10%, which should kind of be, not the greatest year, but it's still a positive year. It probably maybe 15%, maybe 10% itself. At those lower levels, it's going to bleed a lot of NAV. If the Qs are flat based on past experience. I'll try to think of a way to describe this better. I don't have the future value calculator, but I do have this spreadsheet. Let me explain this a little better. And this will go into the Alti competitors also. So we'll answer that question. So what was the name of this spreadsheet? It was called it's Alti something, Alti NAV prediction. Yeah. I'm going to make sure. I really like to show you guys this. I'm just going to make sure that I've caught up with the questions. Okay. How realistic 20% total return? I mean, I think it's pretty realistic. I mean, I'm up more than that I'm up 25% and it's only been 10 months. I mean, but it's been a really good year and it's dependent on the market. I mean, all right, let me look at this. This might help to understand a little bit better. So I'm data driven. I'm data driven, and the thing I'm really trying to solve for is what kind of NAV are we sacrificing with Alti? Because obviously that the way it works is that the NAV is not great, but it pays a high yield, and then hopefully things work out. That's kind of the way it works. So I was just trying to quantify it. So what I did is I went to the first day it was open, started at $20. So I put the price at the end of every month. And so like what you could see is from February 19th, 2024 to February 19th, 2025, it went from $20 to $8.32. That's down $11.68. So it bled off 58% of its NAV value. Now, in that time, it paid an $11.13 dividend. So it was also down on total return. You remember Alti got off to a rough start and they had a prospectus change, but still though, we're going to factor that in there too. It's another data point to look at. So that was about a 55% distribution, but the distribution did not keep up with the total return over that year. Anyway, so Alti's total return over that 1 year time frame was 0.5%. Well, that's when the Qs were up 23% on the total return. So that was a really poor performance. But I use regression analysis to look at all these data points. We have performances, data points that are outliers, and that's probably one of the outliers. Okay, well then March through March, we bled off $10 in NAV, 1067, which is actually worse than February through February on a percentage basis, 61%. Okay, but see, that corresponded with a Q's return of 10%. So, so if we get a moderate return, to answer your question, I'm thinking maybe the Q's are up 10%. Alti's NAV will be down 60, 65%. So then it just comes down to what kind of yield they pay. Well, over this year, they just paid 61% yield. So once again, that's about a wash. They're negative on total return over that rolling 12-month period. Well, then if you would have bought April to April, in April 24 to April 25, and remember, April 25 was in the middle of a crash. Now, this is April 19th, so it recovered a little bit by then. But nonetheless, you only bled off $8 of NAV. Well, but the price is coming down, so still on a percentage basis, it's 61%. But the Qs did pour over that time too. The Qs were only up 7% because of that April pullback, right? So, I mean, I expect to do a little bit worse on Alti. It's the Qs. They're highly correlated. But now this one, luckily the distribution started going up. We got to a 67 here percent. And we bled off 61% in NAV. But even on dollars and cents, we got paid $9.67 per share, and we lost $8.75 per share in NAV. So this is the first rolling 12-month period we had positive return. Anyway, so we made 7% that year, and the Qs made 7%. So that's another data point. Okay, so the next rolling 12-month period, March or April, May to May. Now this thing, we're only down $8.49 on NAV, which is only 57%. Okay. And we had $8.79 of dividends, which is only 59% also. So that, once again, that's not great. We're up about 2% in total return, but the Qs had a 15% year. But you could see as the Qs did a little bit better, we lost a little bit less NAV. Our NAV performance is getting better. Then the next time we lost 739, which is down 54% on NAV. We're doing much better. What do you want to bet the Qs are even doing better? Well, no. But still, the Qs had a 10.4% year. Okay, well, we have to average that all in. Now, we received $8.04 of dividends and lost $7.39 of NAV. So on this one, we made about 5% total return on a 10% Q performance. Well, then the next month or the next rolling 12-month period, we lost $6.26 of NAV, which is 50%. That's finally a good performance. And so I would think, I'm not looking, but I would think that the Qs would be a better performance over this period. I mean, it would make sense because they're correlated. Sure enough, the Qs were up 18%. Okay, so that's, we got $7.52 in distributions, $6, we lost half our NAV, but we got enough in distributions to make up for it. And we had a 10% total return when the Qs are up 18%. There's another data point. That's a 59% distribution. But the longer time goes by, the better performance gets. And the reason is because in October of 2024, there was a prospectus change, and it's basically almost like a new fund since. Not really, but because the prospectus change cut off large swaths of the downside. So it really helped with performance. And you could see that as time goes by, because then this next time we were down 49%, or that's what we just looked at. But the next time we're down 48%. So we lost 550 in NAV, but got paid $7.15 in distributions. But like I say, every rolling 12-month period that goes by, we have more months that are in the good zone where we had the better strategy going. So right here, that was a 63% dividend. Heck yeah, 14% total return. Okay, we'll take that. Now that, corresponding with the better, the Qs were up 18, we'll take 14, whatever. Qs don't pay a dividend. So if you need yield, that Alti could work, but it's not outperforming it, definitely. Not so far. All right, then we go the next one down 550, another 48%, paid 715, 63%, and then the next time, look at this one, only lost $4.81. That's wonderful. 45% down, but the reason it was only 45% down is because the Qs were on fire. This is our best Qs performance so far. Qs up 24%, but there we are with the 26% total return on Alti. We finally beat them, but it took a 24% total return. The Qs, it's like a solar panel needs the sun to be more powerful. We need the Qs to go up. That's what's going to, that's one of the biggest factors. We need a strong market. Even with the new strategy change where they cut off large swaths of the downside, you still want a strong market. These are bullish bets. Anyway, then this next one is a really good one. This is October through October. So this is all 12 months within the new prospectus change. And sure enough, only down 48.2%. Well, yeah, 48.2%, paid 482. And then the distribution was 617. That's a 61% distribution, 13% total return on a 22% Qs. And that's the last data point. But then I also, and I don't know that these are the fairest comparisons, but then I wanted to put in the best of times and the worst of times. So I want to put in the best year and the worst year. We haven't really had a best year yet, but we can look at the April low through July 22nd. I put April, May, and June. It was April through July, and that was incredible. We were up about 12%, and it was a third of a year, and it came out to about 48% annualized. Now, granted, the Qs were up 121% over the same time frame, but you could see it really helped us out also. Now, the distribution went down, but still, we had a big Alti total return that time, but that's not really fair. I mean, but if you would have bought the low and sold the high, that's like kind of a best of scenario. But then a worst of scenarios, what's happened July 22nd through recently. So anyway, but you mix all these in together, you throw a linear regression line on it, and it basically looks like this. It basically looks like this. Figure on Alti to be down 50%. And so what you're really, at least, and what you're really looking for is a 75, 85, 95% yield. But that's pretty much the math on it. Not that can't change. And my figures might have been too negative because I was also averaging in all these data points that just were Alti did terrible before the strategy change. But it is what it is. That's why I also added the good data point where they did great, and the bad one. So that's pretty much, that's it in a nutshell, or that's not much of a nutshell. So what do you guys think about that? But yeah, it's not free money. Best of times, worst of times. These are the best of times. Yeah. Anyway, but yeah, so I know that's a long way to tell you. I don't know, but I mean, if we just in a rip roaring bull market, Alti might make 25, 30%. But it depends on when you buy it and stuff. I enhanced my return a little bit because I bought the dip. And maybe if I hadn't bought the dip, I would have been one of those other 12-year periods that wasn't looking so good. I mean, you're still trading the market on all of these. But anyway, that was my video yesterday, and I just thought you guys might be interested. But that's how I came up with my yesterday video. Is Austin still worth moving to? Well, it's real expensive. A lot of people around here say no, that it's changed and it's too expensive and the traffic's too bad and we have a bad homeless problem and stuff. It's just that I came from a place that was even worse than this, or that I even like less than this. I mean, so for me, it's like, I love it, but I have different reasons to love it. But I don't know if it's still worth it. I think it would depend on what you like to do. If you're single, if you're married. I mean, if you're a single guy, you probably go downtown and just have all kinds of fun and stuff. Since I moved to Austin, I've been a non-drinker and I haven't been downtown to party. I've been downtown plenty of times back in the day, but not since I moved here. I like it, but it's not for everybody. Let's just say that. Nice. Ever heard of UMHB 1320? No, I haven't. Who was the one that asked me if I was at, okay, Easy Life. That's cool. That's cool to lurk. Who was the one that said, hey, have you been to, were you at Hula Hat? That's FW. Okay. And yeah, I've talked to you before. You're a San Antonio dude, right? Or you somewhere. I got you. I mean, all right. Yeah, I wish I was. Seppi hasn't paid a dividend yet. Are you serious? All right. Seppi. All right. Oh, it will this week. That's what Marcus was saying. Okay. I'm just making sure I didn't miss anything that's going on. Yeah. On a moderate gain only, it looks like, 15, 20%. If you throw out those early ones, because they're on the better program. Now let's try to be like optimistic. Let's just try to be optimistic. Like just go based on the October to October, or the ones that at least had 9 months in there. So we'll take the last couple of data points. So Q's up 10%, we make 5%. Q's up 18, we make 10. Q's up 18, we make 14. Q's up 24, we make 26. Q's up 22, we make 13. Q's up 121, we make a little bit less. So a lot of people are mad that, or think I hate Alti too much. And then there's lots of people that think I like Alti too much. It's a very divisive topic. I'm just looking at the data, and, it just depends on what you need. Okay, so let's see here. Oh, but on this UMHB at 1320, no, I haven't heard of it. I haven't heard of it. Put in the comments. We'll get down there if you want to talk more about it. Okay, I think Alti works okay if you DCA instead of lump sum. Yeah, I think that's one thing that can definitely help. I just had some money to put to work in December, and I put it all to work because I'm investing for somebody and they wanted this money to go to work. We're trying to do a dividend snowball. So I didn't even think about timing. I just threw it to work. I thought it would be pretty good because at the time we were blowing up and Trump had just got elected and the crypto boys were in charge of, he basically sold the, parts of the administration to some good guys, the guys that are in charge of AI and crypto. I like Elon. I like those other guys. So I was thinking, okay, this could be good times for this sector, but it was kind of right at the top. So yeah, DCA, if I just didn't have a chance to DCA. So what I did is I still had the same lump sum, but when the market looked like it was going to dump, I traded some in for some inverse funds, some YQQ at the end of March, and held them for a couple of weeks. And then on Liberation Day, I dumped the YQQ, not all of it, but large parts of it, about half of it, at a gigantic profit. And then I put that into Alti and LFGY. I thought those were both great picks. And also one other thing in GDXY, and they've all done really well. GDXY is up 25%, even after pulling back. Alti's up about 25%. I'm up 25% in Alti, even including the December purchase. And then what was the other one? LFGY, Alti, and LFGY is, it wasn't quite up 25%, but it had a good run too. Yeah, these are the best. Sticks. That's what I was thinking too. The best. Yeah, great song. Great song. Man, Styx was a good band. There were so many good bands in the late 70s that we never heard of again. Kansas was all, and they have one or two albums that were excellent. Styx, same thing. There maybe more than that, but they just had their REO Speedwagon. Think about it. REO Speedwagon was incredible. I used to love them. And then there was bands from the same era, like Journey, that lasted the test of time, and we're still listening to them now. And they've been, but as far as REO, Styx, they had kind of their moment there in Kansas. They had their moment there in the late 70s, and and just hair metal took over. And I guess I didn't really like the 80s rock too much. I didn't really like it. I wasn't really into Motley Crue or any of that hair metal stuff. I never cared for Def Leppard or Quiet Riot. it wasn't quite the 80s. It was 87, but I really thought that Guns N' Roses was kind of the class of the field. When they came out in 87, 86, 87, then I thought, okay, this is like 70s classic rock. This is good time, kick-ass music. But between 80 and 87, I think was largely a dumpster fire. I mean, yeah, I like the Van Halen records that came out in that time frame. But, I really think the 80s is kind of a bad time for music. I really think the 70s was special, and I think the 90s was special. And I love the late 70s and all of the 70s, and I love the 90s. All right. Thank you for your thorough data review. Maybe the Merits are a good place. Okay. Maybe the MREITs are a good place to be at 15%. Yeah, maybe they are. Maybe they are. It just, once again, it depends on it depends on the REIT business. That's going to be an especially good place if you're anticipating higher prices in REITs and in real estate. And I think that's what you're saying. With upcoming NAV, DX, I don't know what those are. They're probably REITs, AGNC, and LY, DX. Yeah. In an MREIT, what does an MREIT mean? I know what a REIT is. An MREIT is I want to say a mobile. But what does M stand for? I don't know. You're Round Rock. Okay. All right. Well, hey, you should, I don't know if there's still tickets left, but I don't know if you're an option trader, but Tasty Trade, I've never been to Antone's before. Tasty Trade on November 7th is having a free show at Antone's in downtown Austin. The real Antone's was up here kind of closer to where I live, but back in the day it was up here on the drag, but it's moved back downtown. Anyway, I want to go meet Tom. I admire, I don't know if Tom's going to be there, but I admire those Tasty Trade guys so much. The tickets were free. I mean, I don't drink or whatever. I mean, that's fine, but so this is great because it gives me a chance to go downtown on a Friday night and see what's going on without being down there for drinking. Anyway, I'm going to go do that. All right. 1320 said they used to be based at Fort Hood and Killeen. UMHB is a little college in Belton down. No, I haven't heard of that. They used to be based in Fort Hood. Okay. Boston was awesome. Oh my gosh. Yeah. I'm putting Boston even because Boston did they had some records in the 80s that I really liked. They had a song called Holly Ann, which was a mellow song in a minor key, kind of beautiful song. But dude, it had the prettiest B3 Hammond solo or Hammond B3 solo on it. It just sends shivers up my spine when I hear that song. Plus, it reminds me of college. I think it came out in 85 when I was a freshman. And I just wore that song out. It's kind of the song itself is a little bit kind of like a love song and a little bit whatever, but they just went into this part where there's all minor chords and they just hit this organ solo that was just incredible. Tom Schultz was incredible. I mean, he's a genius. And Brad Delp's voice, I mean, my gosh. Yeah, ELO's, oh my gosh, ELO is so much bigger than ELO because what ELO really is Jeff Lynne, who went on to do the Wilburys and now he produces for, I mean, Jeff Lynne's done every monster in the business. He produces for Bob Dylan. He's played in Bob Dylan's, I mean, yeah, but ELO is where it all started. Absolutely. Journey, Boston, like all of them. I like all of them. What about Loverboy? And I'm not throwing Loverboy in the same category as those. It made me think of Loverboy because my sister loved Loverboy. They had a big album about 79. And I think I went to a Loverboy concert, not because I liked them like on a date or with a girl or something. I also went to a Flock of Seagulls concert, not because I liked them, because I was with the girl. I took her. And a good concert I saw was the Foreigner 4 series. Foreigner's not a bad late 70s band. Foreigner 4 was a pretty darn good album. Now, Foreigner kind of went into the power ballads. I wasn't really big on that in the 80s. Same thing with Aerosmith. But, man, Foreigner was a decent band back in the day. Mortgage REIT. Okay, gosh darn it. Well, are you in the mortgage business? Do you know anything about that? Does anyone else in here have an opinion on REITs? I mean, I follow, it's about all I can do to follow tech stocks. I think I'm pretty good at following the SPY and the Qs. And nowadays you have to follow Bitcoin, but that's why it's always the first three things I look at: SPY, Qs, and Bitcoin. So But let's see what ES is doing. SPY futures, in other words. It's not really SPY futures, but man, that's just such a sight to see. That'll work too. EverSource Energy. I wonder if they're doing data center type stuff, because this energy sector's been taking off with all this data center. SMR. I mean, that's such a beautiful sight to see. Okay, so it looks. Let me get it on a shorter term. It looks like we're up. I mean, I can tell by looking, but we're up. I'm a little bit worried about buy the rumor, sell the news once they come out. It doesn't matter if they drop rates a quarter or half. Even maybe if they drop it a half, people will be afraid they won't drop it next time and they'll sell it. I'm not saying the market, but I mean, I think if you want to hedge something, you might want to do it before Wednesday, just in case. I wonder if on Wednesday they decided they don't want to cut. I mean, Powell hates Trump. I mean, I don't know. I mean, politics plays such a big role. Wonder if they say, "Oh, we've decided to hold the line." I don't know. Anyway, that's something else. So there's ES. Let's look at NQ and let's look and see what Bitcoin's doing. It's a little bit disappointing to see Bitcoin pull back into the end of the day. Oh, shoot. I need to do something really fast. Hang on, guys. This is so frustrating to me. If anyone knows how to fix this problem, when I do a live stream, if I don't go and specifically, there's no way to do this from StreamYard, and I can't do it before it starts. If I don't go and specifically turn it on monetization, it's not monetized. And I'm trying to make something out of this show. My usual live streams don't make any money, but I want to make sure that these daily factors are monetized. I don't know if I could get an AI agent to do it. Maybe I can get one of you guys to do it. But then I'd have to give you my YouTube pass, sign in, but which I don't care about. But I mean, it's just a pain. But that one little thing, you have to do it every time. Does anyone know, can an AI agent that's free, or actually I pay for Claude and I pay for Gemini, could I have them, just make sure that just every time I start a video, I'd also like an AI agent to go paste the link to the video, on socials every time I start a new video, say I'm streaming now, here's the link and go do that. And I've heard agents can do stuff like that for you, but I'm not the best at doing that kind of figuring that stuff out. Anyway, all right, well, let's see what else we're talking about. Yeah, mortgage REIT. MREITs are financed. Okay. Yeah, Tom's an American hero. He's a great ambassador for trading. Maybe it'd be great if he's there, but he's probably not going to be there. But I'm trying to think other than Tom. I mean, I love Nikki Batts, and Nikki Batts has really taught me probably the second most, and also Dave Schultz. Dave Schultz and Nikki Batts. I mean, Nikki Batts has the exact same philosophy as I do in trading, or I've picked up off copy. So hopefully I'll go get to meet some of those guys. So you liked all the punk, pop and rap from the early 80s. Okay. So, I mean, I remember, speaking of con, I went to the Go-Go's with the same girl I went to the Go-Go's with the same girl I took to Flock of Seagulls. She was my girlfriend. She actually lives in Austin now, but she was my girlfriend junior year. But yeah, trying to think, Devo, yeah. Pop was in the early 80s. Someone we haven't talked about yet that's in the 80s. That's one of the most monstrous bands in the history of bands for pop is Toto. And that Toto was Michael Jackson's rhythm section. And I'm not a huge Michael Jackson fan, but for me, I really enjoyed Thriller and I really enjoyed Bad. I'm a Quincy Jones fan and I was a fan of the musicians. The musicians, the Michael Jackson that Quincy Jones hired to play was stellar. Even not being really an R&B guy, really. So yeah, they did the early 80s and the Police. Now the Police isn't really pop like Michael Jackson, but they were a really good early 80s band too. I saw the Police also. I saw Kiss. I think Kiss was my first rock concert. Willie Nelson was my first concert, but my parents took me and I didn't even want to go. They had an extra ticket and said, "You want to go?" They had floor seats. So I was young. I was too young to go by myself, maybe 11 or something. And I was thinking, I don't want to go see this country guy or whatever. Well, I get there, and after about 2 songs, when he plays Whiskey River, freaking, they got those amps cranked up, and I'm realizing this ain't country. I mean, this is country, but it ain't what I was thinking. And I've loved Willie Nelson after. Then when he starts soloing, and he's a mass, especially back when he was a younger guy, he could really, man, yeah. So that was probably, and still to this day, that Willie Nelson show is one of the best shows I've ever seen. It was Willie and Family Live in '77. So it was actually when I was 11, because I was born in '66. But yeah, then my first show to go to by myself was Kiss, and I was about 13. Leave a sticky note, nice and high tech. I know the sticky note's fine, but then I have to go. I mean, yeah, I know it. It's, me, but then I have to, I have to, like, if it's too long of a live stream, I miss monetization if I don't go right away. And there's no way to do it until the live stream starts. But anyway, yeah, I like Liz and Jenny also. Yeah, I really like Dave Schultz. I've really copied a lot of my stuff from Dave Schultz. His thing about for every give me, there's a gotcha. That's true in life. And that's definitely true in high yield ETFs. I don't use the same words, but but he's a no free money type guy. He's a professor and stuff. I'd like to be like him when I grow up, maybe, but Nikki Batts is good too. Yes. Been to Belton, drove to Waco too, which I think, yeah, Waco is definitely where Baylor is. Yeah, Rosanna's incredible. What about the outro to Rosanna? The radio used to cut it off, but that outro, when they start in that little piano thing, that David Page is monster on the piano, and then that Lukather solo at the end of Rosanna. The end of Hold the Line. Hold the Line doesn't have an outro, but Toto's outros are incredible. Pamela has a really good outro also, I thought. But Rosanna, yeah, Hold the Line's a great rock song. Maybe there's a little outro, but Hold the Line just has a quick 4-bar solo. I don't know, but that outro to Rosanna could be a song within itself. I want to just remix that into a song. Okay, Foreigner was a hit band. Then they were soft. Yeah, Lou Gramm voice on other level. Kind of like Aerosmith. Aerosmith rock, Toys in the Attic and stuff. And then by the 90s, they're doing the power ballads. Black Sheep. I'd forgotten about Black Sheep, but then but those were my big band concerts. But then by the time I got to the mid 80s, I was in college and I got real into other guitar players. So I saw Stevie Ray and I saw Eric Johnson in '87. I saw him on the tour before he even had, I saw and I heard Cliffs of Dover before it had come out. Now I got a bootleg somewhere, so I was aware of the song, but it didn't come out till like '89 or something. And I saw the tour in '87, and yeah, that was incredible also. Then I saw him again in '89. But yeah, it's good talking about music. I could talk about music all night. All right, guys. Well, unless there's any more questions, I'll let you guys get out of here. It's 11 o'clock where you guys live, 10 o'clock where I live. But anyway, hopefully that show will turn into something. Maybe I should go cut out just the show part and cut off all this BS and re-release it as the Daily Factor. I mean, I like this BS, but maybe everyone else doesn't like to sit around and who knows. But this is definitely good for live streams. We could talk about sports. Oh, Alti-competitors. Okay. Well, let's talk about Alti-competitors really quick. Let's do that. And what we're going to do is we're going to go to the Max Factor to inform our opinion. Maybe we should have like an Alti-competitor show. I guess that's going to be the show, the hedge fund show. But let's just go look at these really quick. So, yeah, sorry, I almost forgot about that. Let's go get, I guess we should let's do it this way. It's more the competitors that are coming out that I'm excited about, but we could pull this up and we could pull out SEPI, FEPI, LFGY, and Blocks and WPay. Those are the ones that I'd say are closely related, but we know Blocks is going to win. But I mean, and I will do that on Wednesday night. But what I'm excited about is, here's what I'm excited about. If you're one of these guys that thinks Alti's NAV is a hot mess and you hate it or whatever, I think the curves version of Alti it might be help those people out who like Alti, but they just don't like the nav stuff. And then I think the Rex one might be kind of like might be kind of in between, but I'm really looking I'm going to like to have an alternative, a safer alternative to point people to. And I would also say I would bring up SEPI as a safer alternative. SEPI is definitely an Alti competitor. If you can deal with 35% yield, they don't move stocks in and out as fast, but they're able to move them in and out as things change. You have 35% yield instead of 75 or 85. So I'd say right now, if you want more safety for Alti competitors, you have SEPI. And then you're going to have Curve after Friday. What's the KYLD? Those are going to be that end of it. Then we'll have to look at Rex. I think Rex will kind of be in between. But then if you want Alti, and then you want like more dangerous than Alti, Alti's not dangerous enough for you. You want either more upside or more yield or some combination of both. You have Blocks. Now Blocks doesn't have more yield, but it just gets so much upside. So I think if you want like more dangerous than Alti, if Alti's not exciting enough, I think I would point towards maybe LFGY and Blocks and maybe WPay. WPay is not really, they don't switch stocks in and out, but it is a basket of good stocks because it's all the stocks in the Round Hill universe. And they don't have any Round Hill stocks. They aren't going to release one in Moderna. They're going to try to release one and get, so all their companies are pretty good. Yes, some aren't doing as well as others, but I'd say that if you want to put on more risk, lots of risk, you have Blocks, WPay, and LFGY. So that's what I would say on Alti competitors. Then you have Alti's kind of right there, still risky. And then on the lower end, and then right there, probably underneath Alti, you're going to have the new Rex fund, Alt-I. I think it'll be a little bit less, but probably similar. And then it'll probably be a little bit less. We're just going to have to see what they do because they implied they're going to do a different strategy. If you read their prospectus, it said when we expect higher prices, we're going to sell options in such a way to capture extra upside. It says when we expect lower prices, we're going to sell options in such a way to protect our downside. So if they start doing callers in a down market like Alti does now, Alti does it all the time, maybe they start doing callers in a down market, but then in the up market, if those Rex guys are maybe doing what Blocks does and sells a put spread, or maybe a cover call spreads, what LFGY does, maybe Rex is the answer. Maybe Rex is going to be the one we're looking for. But I really think Howard has a pretty good track record over at Curve. And I think Howard's probably going to make a safe version of Alti. Because after all, look at KQQQ. Howard's made a safe version of triple QY, or there's lots of triple Q funds that are real volatile and all over the map, like QDT, QQQY, lots of those like that. And Howard's like, hey, I'm going to make KQQQ. I'm going to pay you less yield, but it's going to be a lot safer. So he's done a good job as well. I think that's kind of the state of the art on Alti competitors. Sorry, I almost forgot to talk about that. All right, so your Marcus is thinking Alti's going to be 65, Alt-I, KYLD will be 45. Yeah. I was guessing, I thought I guessed 40 on my show for KYLD, but I just made a guess when I did the video. Yeah. And let's see, Alti. Now let me think about the prospectus. Now the prospectus didn't really give me the idea they were going to be like, they could be the same yield. I think they're just going to basically do strategies with uncapped upside when they anticipate higher prices and run callers and lower prices. Well, running callers, you could still make decent money. That's what Alti does, and they're making. So yeah, I probably Alt-I and Alt-Y will be close. And there's some months that Alt-T just earned 65, 75%. Yeah. So they'll probably be pretty close. Lately, Alti's been hitting like 85 and 90, and that's what I was telling people on my Alt-Y video. That's one thing that could make me sell Alt-D is if there's an environment with volatility where they're no longer able to maybe define that many stocks that have high volatility. In other words, if volatility comes crashing down, then at that point I'll change my tune on Alti. But I mean, because the NAV's going to be the NAV, even if the NAV that's the way it's going to work. Pretty much. So, so what you're really counting on is the high volatility is really what you're going for. So if for some reason I thought that Alt Y was going to be unable to keep getting the high volatility, I think it'd make it less attractive. But I think going forward from what I've seen, especially through the end of the year, I think volatility's here, and I think that, and the market looks good. So I like Alti at least through the end of the year. You'd be happy with 45. Heck yeah. Even 35. Wonder if you could get a fund that paid 35 and the NAV went flat, you would double your money every 2 years. So that would snowball pretty dang fast. But it's a hard thing to pay 35% out and have flat NAV. It's just hard. But it's more possible than paying 85% out and have flat NAV. In fact, you aren't going to have it. If you pay 85, you probably won't have it. But yeah, when you pay 35 or 25, you can have flat-ish NAV. Let me show you a good proxy for that. QDTY from Roundhill. I don't know if any of you guys like this. These guys pay around 35%, and their NAV does better than, it's not flat, but it does better than some funds. Let's just say that. QDTY, when it first came out for a while, was beating the NASDAQ, or XDTY was, or no, that's Yield Max's. QDTE is Roundhill's, right? God, there's so many of these. QDTE, yeah, XD. Anyway, but that's an example of a fund that pays 35 or 40%, and its NAV doesn't just bleed all over the place. It's not, But anyway, yeah, if you could have one that paid 35% and you could get, the NAV's never going to be totally flat, but if you could average flat NAV over a couple of years, the NAV's going to go up and down, but if you could average an unchanged NAV and you could find a fund that paid 35%, that'd be pretty good also. Just depends. That's why I always say don't get these if you don't need the income, because that's really that adding the extra income adds extra risk, which if you need income and you're trying to build an income portfolio or trying to bring your average yield up, then these can make sense. But, for growth investing, I just don't get it. And I know this makes me unpopular, but I don't think that the weekly compounding is going to make up for, it's not going to turn it into a growth fund. Yeah, it might help a little bit, but anyway, QLDY, well, we looked at that today. Maybe you weren't on, but let's look at that really fast. Lightning. Oh, it's already up. It's right here. Where's my drink? Here we go. What's up, Jax? He's looking at me kind of like he needs to go potty. We'll address this one, and then I'm going to have to get out of here. Just a second, buddy. Okay. Here's bottom line. This is total return since inception. If you had bought a lump sum on day one, didn't reinvest the dividends, just took the dividends in cash, and it factors into the return, but you did the same thing with Qs. Well, Qs have paid one dividend, but QLD or QLDY has paid 2 dividends a week, none the first week. But then since then, they paid 2 dividends a week. Well, this is a lot of upside. If these guys could maintain this relationship, if we could go a full year and maybe the Qs are up, 30% and this thing's up 28, catching all the upside, plus it's paying about a 30% yield, and it's, and it's not really leaving upside on the table. Now, for a while it was leaving upside, but yes, this one for the first time today, this is today's result. Now, these are daily results. On the far right, I don't know why Google can't get this right. Alti was really up 1.94, or not Alti. QLDY was really up 1.97. I've hit refresh multiple times, and this still says 2.04. I don't get it. Well, anyway, it's up 1.97, but why that's important is because the NASDAQ was only up 1.78. So we want the blue line to be ahead of the red line. This is just a one-day return. And it is lots of times, or in lots of times it's even. So this thing has potential. It has potential, but the jury's still out on it. Mike Coe's going to be on a show with Ambassador Quan on Thursday, and I'm not hosting or anything, but Mike asked me to put in a question. So I'm going to think of a question maybe to ask him, and I might ask him about this. I have a little question or two to ask him about this. Around 25. Yeah. I used to, let me look here. I was keeping track of the dividends for a while, and I looked at every day, and I have their daily yield. And then I put an average down here at the bottom. I'm looking at 37 right now on QLDY. I mean, that wasn't the dividend that it paid though, but this is how much premium they captured every day. 48, 31, 49. They skipped one day, but then 38, 36, 35, 31, 36, 31, 40. So that comes out to 37 if you just average those. That's not always directly correlated, but let's just look at what they've actually done, because QLDY is too new to be on the max factor, so I can't look at it there. So if we look at it here, assuming this is up to date, it's paid $1.56 in divvies, $1.56 over, we'll call it a tenth of a year, or we'll divide that by 11. So that goes in 9 times instead of 10 times. So 9 times 150 was 9 times $1.50. It's 13 and a half. Okay, you make it 14 to account for this other little bit here and there. So $14 on something that costs 50 is about 28%, right? And what did you say? You said 25. So yeah, we're right in the same ballpark. If I had 1K to invest, what would you go for? I don't know. I mean, it depends if it's the only 1K I had or if it's just fun money. But I'm just telling you, the ones I like the best right now are Blocks, Alti, and this is fun money. This is hitting for the fences. Blocks, Alti, WPay. And if you don't like nav decay, don't mess with Alti. Maybe none of those will be great, but I don't know. But if you wanted to put on risk, Blocks, Alti, or WPay. If you wanted to, if this money was the last $1,000 you had in the world, you're counting on every penny from it. It's not just kind of like putting on risk. I would say Big Y, BIGY, is a really good, safe one. And so is Triple QI. So if it's your last money in the world, Big Y or Triple QI, if you have other investments and you have a 401k and you want to get in on some of these fun things, I think Blocks would be a good one. And Granite Share, yeah, Y-Spy also. 1K, probably Granite Shares ETF, Hui. Remember, you're dependent on Hood going up. So if Hood turns around, Robinhood, you'd be in a bind. But yeah, that could work too. That could work too. So what are we talking here? FEPI. Yeah, FEPI has had a great comeback. Is that FEPI or is there really one called FIPI? I mean, I think you probably meant to type FEPI, but let me see. Let me make sure there's not one I don't know about called FIPI. No, it's FEPI. Yeah, FEPI's had a great comeback. Same ETF, same stocks basically as GPTY. GPTY and FEPI are some of the best performers lately. Let's just run them here. FEPI. I know Jackson, just a second. He's whining. I better take him out. But let's see. FEPI. GPTY. Yeah, they've had a heck of a run. I mean, people say YieldMax sucks. Maybe it does, but GPTY certainly doesn't. I mean, a lot of their stocks are really good. And my favorite safe one, I want to hit this one more time, with Big Y. And also, or if you don't like YieldMax, that's fine. Use Triple QI. So let's just kind of look at some safe ones and run them next to each other. But this Big Y's, I mean, they're both good stocks. I mean, those are hard to beat right there. The yield on Big Y is 12%. The yield on Triple QI is like 13 or 14. If it depends on how much yield you need. If you don't need that much yield, or you're young and you have a job and the yield's not that big of a deal, maybe these would be best. Yeah, Maggie and YMAG are also good, and I forgot to mention those. We'll get a chance to talk about those because we're going to have, like I say, on Wednesday, we'll do the multiple diversified funds. Tomorrow is Tesla Tuesday. Thursday and Friday, we'll do fun stuff also. So K-Triple-Q might not be a bad choice either for the safe one on the $1,000 question. those are the safety champions: Big Y, Triple QI, and whatever I just meant. I already forgot it. And whatever you just K Triple Q. Those are the safety ones. All right, guys. Well, thank you so much for being here. I really appreciate it. And let me know if you have any suggestions for the show and all that kind of stuff. Hit me up in Discord, and I'll talk to you guys tomorrow. It's been fun. I particularly liked talking about bands. I could talk about bands and music all night. All right, guys. Well, thank you so much, and you have a great day.